I wanted to take a look at the utilities sector, and I'm using XLU Stock, which is the Spider Select Utility Sector ETF. Utilities have been on fire. They've actually outperformed the broader stock market, which is kind of interesting because it's utilities. But that's only over the past few months. What's going on is there are a couple stocks, and I have them down below, three stocks that are up triple digits in the past several months. What's going on is simply this. A lot of these companies are green energy, renewable energy, non-carbon driven, and they're investing heavily, while at the same time there's an announcement by Microsoft and Google that they're looking for these kinds of energy companies. So all of a sudden business is looking good for these kinds of energy companies, and the stocks have popped higher. As a value investor, if you're looking at these from a perspective of value investing, is there still some gas in the tank? Let's break down XLU Stock, the utility sector ETF, and I'll show you some of the stocks that have been moving in the sector and what I think might happen with the sector moving forward. Let's jump in. Here's a breakdown of SPY stock. SPY stock is the bar chart in here, and as you can see, SPY stock itself up 29.82% when I took this chart. SPY stock is the Spider Select ETF for the S&P 500. If you go down over the past year, you can see the 11 different sectors. The Pepto-Bismol, all the way at the bottom, XLU stock, is energy, up a whopping 6%. But if you go back just a few mid-April, if you kind of start looking there, and if you go back all the way to February, you can see that there's some pretty decent gains. And in this chart, what I did was I broke down, going back towards the end of February, XLU chart, which is the Pepto-Bismol flavored up at the top, is up 14%. Now, this is SPY stock versus all 11 since close to the beginning of this year. Some pretty decent sized moves. Utilities do not move like this. There are a few outliers. Some of those outliers are really performing well, and they still have some gas in the tank. Now, real quick, I'm an economist first and foremost, and I base everything on the economy, whether or not I take a value investment. Our economy is going to begin to contract. Right now, utilities have very high expenses because of higher interest rates. Eventually, interest rates will move lower, which means lower costs for utilities, and that will mean higher profitability. So although we're seeing a big move higher in XLU stock over the past several months, there's more, broadly speaking, with XLU stock. Now here's a look at what I did is I kind of went through and I cherry-picked XLU stock versus some of the bigger players. XEL, that's the one all the way at the bottom. XL Energy, really underperforming. It's pretty much been an underperformer across the board. It's down 12% since this period of time. But the rest of them, you can see some of these stocks. The green at the very top is the one that's really VST Stock, way at the top, up 165%. CEG and NRG Stock are also the other two that are moving higher. Those are the three that I really want to kind of take a look at. XL Energy has some issues going on, regardless of what's going on with the overall economic factors. There's sort of a weight on the broader Spider Select ETF. All right, let's break down. This is NRG is the stock symbol. Current price is $81. They're projected over the 2024 earnings per share $4.33. That represents a yield of 5.36%. Now the U.S. 10-year Treasury is trading at 4.5%. Over the course of the next 3 to 6 months, the Federal Reserve is going probably closer to 5 to 9 months. The Federal Reserve will start lowering interest rates. So that U.S. 10-year Treasury yield will go downward, which means you'll probably see prices moving upward for these higher yielding energy stocks because the cost of them doing business, because of lower interest rates, improves, and then all of a sudden people are going to be looking at it and saying, wait, there's a lot of earnings available there, and the yield is pretty low. So the 5.346% is actually probably going to be looking real attractive in about 3, 5, 7, 9 month period of time. Keep an eye on CEG stock along with XLU stock, the ETF. Keep an eye on NRG stock because that yield is going to start to look attractive, especially to individuals who are looking for dividends. Those kinds of investors will drive this stock price up even further, despite the fact it's moved from about 30 all the way up to 85, 87.5 real fast. All right, moving forward, CEG stock, Constellation Energy, current price 217, 2024 earnings per share $7.77. CEG stock 357 yield. That's not exactly high, but the thing is, these guys have done a tremendous amount of investing, and very likely in the coming years, you're going to see CEG stock continue to perform like it's been doing. I'd be looking for a pullback when CEG stock itself yields probably closer to what the U.S. 10-year Treasury is yielding. So that would be a significant pullback. I think I did some math on this, and I figured probably 175 would be a good buy point. That if you actually got 175, if we did see CEG stock, Constellation Energy, dropping to 175, that would be a really good value investment given its yield and dividend, and certainly given its future. Finally, the third stock, VST, Vistra Corporation, current price $100, 2024 earnings per share 431. You're looking at 435, 4.35% yield versus the U.S. 10-year Treasury at 4.5%. Again, here's a stock that with lower interest rates, their profits are probably going to improve. At the same time, given some of their investments that they've been doing, this is a company that has a lot of upward potential, but I would wait for a small pullback. Now, we've got a lot of economic data coming out over the course of the next several months, and a lot of these stocks will likely to sell off because the economy is sort of moderating. But if you've got Microsoft and Google who are looking at their AI consumption and the costs of energy, and they're targeting companies that are producing green energy, windmills, nuclear, and things of that nature, any kind of pullback would be an opportunity to jump in, because these companies will ultimately be chased by individuals who are looking to invest in higher dividends. And so when that yield pops a little bit higher, those savvy investors looking for those dividends are going to keep nibbling at the bottom. These three companies do have a lot of upside potential despite the fact that they've just skyrocketed. This one had a median price of about 22.5. Now it's trading over 100 in a very short period of time, about a year. That's extraordinary for an energy company. But just as individuals have been chasing, say, AI stocks such as NVIDIA, it's going to cost a lot of money for running these AI facilities, and that's why these stocks, these energy stocks, have been moving higher. XLU stock itself, the energy sector ETF, of course, has been performing pretty well lately, but over the course of the past year, about 6%, which is about 23% below the broader stock market. So if we do see that pullback, maybe if you're just looking for ETFs to get involved in, XLU could provide some kind of ability to buy in at the dips, but I don't see a whole lot of upside potential with XLU stock itself over the course of a period of time. Certainly there are some stocks with some big outlying factors to them, and it's all related to AI stocks. Who would have thought that energy companies would be doing something like that? Make sure to hit that like and follow button if you're just finding this kind of content. What I do is stock market analysis based on economic data and fundamental analysis versus looking at charts. I don't look at charts per se like they do in technical analysis. Regardless, I also have my Substack email newsletter. If you are looking for written content on this kind of material, make sure to jump in on that. We'll see you in the next video.